Okay, good evening, everyone. Once again, for those that have joined us since my first greeting, please make sure that your student number is captured into the chat section. That's the only way we are keeping attendance in this at this point, and it's extremely important that we do track the correct number of students that are joining these meetings. So first up, please make sure that your student number is captured into the chat section. Then, as you guys know by now, there's a volunteer. If you send me your name and the module code to that number, I will add you to the WhatsApp group, and on that group I share the questions that we will be doing that evening, as well as the solutions after each session. So make sure that you've sent me your module code to that WhatsApp number. Then for tonight, I have already distributed over the WhatsApp group. I've distributed a question that we will be doing. It's a cash flow question. So we won't be doing or working too late tonight. I would like us to focus on the cash flow question, since I think that is a point of interest. And then tomorrow night we will continue with a partnership question as well as a close corporation question. So for tonight, a cash flow question, and then tomorrow night we will continue to delve a bit deeper into partnerships as well as another closed corporation question. So I'm just quickly going to unshare the screen and then put up the question. If anyone is not yet part of the WhatsApp group, I will also take this time to add you to the WhatsApp group, and in the next minute, so just give me a minute and I'll add the students that are requesting to be added to the group, and then I'll share the question with them as well. Okay, we can start as usual. I know it might the question payable will be a multiple choice question, or so I've heard. Please don't take it from me. Please always pay attention to the communication that you receive from UNISA directly. I'm not the person who is sitting there setting the exams, nor do I have any knowledge in terms of the exact format of the exam. So please always rely on the direct communication that you are getting from your lecturers. I'm just facilitating on the academic content to make sure that you have a sound understanding of the specific topic that will be asked in the exam. Having said that, let's assume that it's a multiple choice question. So I've heard most of the students have told. You must still be able to do the question as per normal, since that is the only way that you will be able to understand when they ask in a multiple choice question format any of the underlying topics. If they suddenly ask you to recalculate retained earnings or a specific portion of the cash flow statement, if you haven't done it in that way, they will catch you and you will do the wrong section. So please make sure that in your preparation towards the exam that you understand each section of your financial statements extremely clearly and that you have a very comprehensive understanding of it, and that they don't catch you out if they ask you to calculate a certain portion of a financial statement. So, and the only way that you can do that is by practice, and practice is in doing the questions as they are usually asked. So let's go to the required section of this specific question. Okay, here they ask, prepare the cash flow from operating activities and cash flow from investing activities section of the statement of cash flow of Groot Slangbuilders Warehouse CC for the year ended 29 February 2012. The cash generated from used in operations must be disclosed according to the indirect method. So there they clearly tell you what is the method that you must be using. So if I look at if you look at the question, so you can always be asked that in two ways, the direct method or the indirect method. Who can tell me what is the difference between the two methods? Guys, this is a participatory session, as I always say. So if you want to answer a question or participate or raise another question, just unmute your mic and you can ask. Any idea?
I think with the direct method,
yes,
we're looking for the cash we received from our customers, and then we look at the exactly cash we paid to our suppliers. So
correct.
that's for the first two items. That's the things we work with. And now with the indirect, we work from with profit before tax. So in case we are given profit after tax, we have to give it back to work it back to profit before tax. Then after that, we add all non-cash items back, so that we get actual cash. Because as the statement says, cash flow. We're not dealing with non-cash items. We're only dealing with cash items. That's my understanding.
Okay, 100%. Guys, just give me a moment. I'm having some technical difficulty on this side, opening another question that I want to show you. If it doesn't want to open on my side, I'll just share it over the group whenever it does open. Apologies for the wait, guys. Okay, so let's start. Yes, I'll share the question that I wanted to open. I wanted to show you another example of how they can ask it in the session as well, but apparently it doesn't want to open. There's something wrong with the file format. But correctly, as the gentleman has answered, the direct method is where they specifically ask you to list the cash paid or the cash received from our clients, specifically so we will look at our sales, what sales that we've made, and then also cash that we paid to our suppliers and our employees. So it's the more condensed version, whereas the indirect version is where we eliminate all non-cash flow items as well as show the movement in our working capital. So everybody happy with that? So now we know what they want for when they want it. So they want us just those two sections of the cash flow statement, the cash flow from operating activities and the cash flow from investing activities for 29 February 2012. And they want us to use the indirect method. So let's quickly start going through the information and see what they give us. So we can start our answer already. As I always say, let's work through it very structuredly. So we have Groot Slangbuilders Warehouse. Yeah, warehouse. Statement of cash flows for the period ended 28 to 29 February. 29 February 2012. Cash flow from operating activities. Okay, so the main part where we will always start with this, with the indirect method, is we will always start with the profit before tax. That's the main difference. That's the starting point when you use the indirect method. So we would like to see that, and then we start eliminating all non-cash flow items or items that must be shown separately. So items like dividends or interest paid or received, either one of those two items like that, we will then add back or eliminate whichever direction it must go, and we will show it separately after we've adjusted for the working capital, because after that amount, the profit before tax, after those adjustments together with the adjustments to working capital, the movements in working capital will give us our cash generated from operating from operations. And then we start adding all those items back, such as interest paid or received, dividends paid or received, income tax. There can be items, and then a few other items that we would like to add back. We will then start adding back to that to eventually get to our net cash from operating activity. So you guys see how important it is for you to understand the format or the layout of your statements, because if this was asked in a multiple choice question format, it would have been considerably more difficult than in the usual way, because here you can show calculations and you can show how you've done it, but in a multiple choice setup, that can't really always be done. So be very careful that you don't underestimate a multiple choice question. You really need to know your stuff when you do those questions. They can ask it rather difficult, but only difficult if you didn't understand the layout. So if you didn't focus in your preparation on the right stuff in the right way, then the questions will be difficult. So make sure that you prepare correctly. So let's go back to the question. So the accounting officer of Groot Slangbuilders Warehouse CC has managed to prepare correctly all the financial statements and notes thereof, with the exception of the statement of cash flow for the financial year ended 2012. The following items are extracted from the financial statement and presented to you. So we have 2012 and 2011. There we have property, plant and equipment. Okay, so remember they're asking us operating activities and they're asking us investing activities. So always remember investing, as we discussed last night, investing activities has also got to do with your fixed assets, so more your property, plant and equipment, as well as your actual investments. So if you look at your fixed assets, you would want to purchase fixed assets for one of two reasons. Either to maintain current capacity or to increase current capacity. That will be the two items. Then obviously if you sold any items of property, plant and equipment, the actual cash flow involved there must be shown separately, as well as any investments acquired or disposed of. So those are the things that you must pay attention to. So as you go through the information, make notes next to the side of it to clearly, or already as you read, not waste time, but you're already making notes and you are isolating the items that you want to put in the various sections that are required. So first up is the property, plant and equipment. So that's in the investing activity. Investment at fair value, investing activity. Trade debtors, inventories, cash and cash equivalents. Cash and cash equivalents will always be your final balance, but trade debtors and inventory will be working capital, and that will be your operating activities. Retained earnings not relevant for this part, or for a direct line item. It might be relevant in calculating your profit after tax, because remember, after you've gained your profit after tax, it goes to retained earnings. So if not given, I didn't see the rest of the question. If not given, you must pay close attention to that line item. Then we have loans from members and loans to members. So there we will have our financing activities, mortgage, finance activities, and then SARS will give us an indication of what it might assist us in calculating the tax that was paid, and that will go to operating activities, or assist us in, if not given separately, the net profit that went to retained earnings, in other words, the profit after tax. It will assist us to get to the profit before tax, that specific SARS line, but we'll have to carry on reading and see what other information is given. But those are the notes or the lights that must come on as this information is given. The note pertaining to property, plant and equipment for the year ended at 29 February 2012 is as follows. So here they give us the note for property, plant and okay, so the equipment shows us land and buildings, equipment and vehicles, so three categories. And here they tell us the cost price. So we are very concerned with the cost price, because remember, depreciation itself is a non-cash flow item. But since it's a non-cash flow item, remember, if we want to work back to the profit before tax and also to the specific part of profit that is only cash, depreciation must be excluded. So there we have the cost price. So that's where we will start. We have accumulated depreciation. We have additions during the year. We have additions during the year. We have disposals. So disposals will tell us what we sold an asset for. And what is very important to note about disposals. Disposals are always shown at carry amount. That note and that line item means that the carry amount of that item that was disposed of was 44,000 Rand, not necessarily the cost. So depreciation was already taken into account then. Then we have depreciation for the year on all assets, so on all equipment and all of the vehicles, and we have a carrying amount at the end, which is the cost price and the accumulated depreciation. Now let's see if they give us more information regarding these items, because we now need to determine whether it was where assets were acquired, because we acquired both land, we acquired land and buildings, we acquired equipment, and we acquired vehicles. We need to determine whether those items were acquired to maintain current capacity or to enhance or increase, expand current capacity. Okay, You have also obtained the following information in respect of the corporation. All transactions were correctly recorded. So here they just give us information. And here they give us the profit before tax for the year ended 29 February. So they're giving that to us. So that's something that we can immediately go and slot into our answer. So profit before tax. Guys, if there's any problem in terms of the way I'm displaying the answer on the screen, you can just unmute and tell me. So if it's too big or too small, just indicate. So the profit before tax, I'm going to use that column, is 489. Okay. Then we have interest. And they say the loans. So let's see if the information here. So interest is not specifically listed there, but here they do tell us, remember to read correctly. They say all transactions were correctly. In other words, if we want to eliminate any non-cash flow items, we can now know that any information given were already correctly recorded for accounting purposes. So for cash flow purposes, we must decide whether it must be eliminated because it's a non-cash flow item, or whether it must be included with a different amount to make sure that it's the cash flow amount included. So as we all know, interest itself is a non-cash flow item. Okay, so let's quickly have a look there. They say the loans from the members bears an interest rate of 10% per annum. The interest for 2012 financial year was paid in cash to the members. Okay, we'll have a look at that now. And the interest expense in respect of the mortgage loan for the 2012 financial year amounted to 99,600. Okay, so we need to go and see what was the interest expense, the total interest expense. So let's say their profit before tax, and we say add interest. Okay, I'm not going to say add or anything. We'll just say interest expense. Add back. Calculation 1. So I'm going to start here at the bottom with the calculations. So the interest expense that I'm going to start with is the one on the loan because it's given. On the loan as 600. So then we have the loans from the members. So let's go have a look. Guys, just please make sure that your mics are muted. Okay, so loans from members, so there we have that amount. Is 229,000 at the end of the year, but it had an opening balance of 150,000. So we need to make sure when did that increase happen, because the interest rate is 10%, but we can't apply that 10% on the full 150 or the full 229 because there was an increase in the year. So we first need to go and determine when did that increase happen. If for those of you that were part of last night's class, one of the questions I gave a different scenario of when there's a movement in a loan amount and you have to calculate the interest, and that movement in the loan happened during the year. Then you have to calculate interest on the various portions of the year and the various amounts of the loan for those specific parts of the year. So let's go and see what they tell us here. If they give us a bit more information on the loan. And here they say, An additional amount of loan from members was received on the 31st of August 2011. So very important part, just by scanning, 0.5 is important. So on the 31st of August 2011, so let's go to the calculation. So loan to members, and you can just say what's that date? $150,000. 50,000. 10% for how many months? March, April, May, June, July, August. So 6/12. Everybody happy? So 150 times 10% times 6/12. And then we can say loan to members post 31st August 2011. And there we have the new value, the value that it is at the end of the year, the 229. So it's 229 at 10%, also times 6/12. Everybody happy with that calculation?
Isn't it loan from members?
Ah, yeah, sorry. So the value $118,550. So it was originally deducted. It was an interest expense, so we need to add it back. Okay, we've done the interest part. Point 3, inventory records of the business revealed that during the year an amount of $250,000 was spent on purchases and the cost of sales amounted to $217,000. Okay, so that will assist us in calculating the inventory. I'm just searching for amounts that we need to take into account to get to our that we need to eliminate, add back, or deduct to get to the actual cash flow. Okay, so we'll get to the inventory because that's part of working capital. So you can write there working capital. We do need it just a bit later in the calculation. The income tax expense, again, we do need that a bit later in the calculation. We already dealt with 0.5 additional amount of loan of loan from members was received. And then they say the vehicle of the business was stolen on the 1st of March 2011 during the financial year. So it's the first day of the current financial year. During the financial year, the insurance company paid the carrying amount of the stolen vehicle out in cash to the closed corporation. So we can consider it as a sale. So if we go, so it was a motor vehicle. So if we go to this note that was given, it's telling us that, and see how clever they can ask this. So here you must pay very close attention to what I said earlier in terms of knowing what the amounts are in your financial statements. They said the insurer paid out the carrying amount. And what did I say earlier about disposals? Disposals in the notes to the financial statements is shown at carrying amount. So that's why, because knowing the statements, I can tell you that is actually the carrying amount.
Carrying amount.
And now, since you know it's the carrying amount, you will also know that it's now the proceeds that was received from the insurance company. And where do I have to put the proceeds? In the cash flow from investing activities. So here you can put into note 6, you can just write there next to it, you can say proceeds from stolen vehicle, investing activities. Point number 7, the closed corporation purchased a new building during the year. It was paid for with a cash payment from closed corporation's own resources and a mortgage from Grootfontein Bank. The proceeds of the mortgage were paid directly to the estate agent. Okay, so we are just concerned here with the fact that it's a new building during the year. So will that be to increase current capacity or to maintain?
To increase.
Exactly. So how do we know that? Because if we look at the statement, there were none. So it's a completely new building. So it can only be to increase, not to maintain. So you can write there, because we will get back to it, you can write there, purchase new building during the year, increase in PPE to expand capacity. Additions to the community equipment were paid for in cash. So in the absence of them telling us why we purchased it, we can say it is to expand because we already had equipment. We already had equipment, but we bought new equipment. We didn't sell any. And now we can conclude that with vehicles, since a vehicle was stolen, that would have been the reason why we incurred the cost of a new vehicle. So see, that's how you interpret in the absence of further information that you must make logical assumptions. A vehicle was stolen and now a new vehicle is purchased. So we did that to maintain. We already had equipment, but we purchased more equipment. So it's to expand. We didn't have any buildings. We purchased buildings. Expand. And yes, even if you think about it in a multiple choice question, they can ask you, calculate the cash flow from investing activities relating to investment in property, plant and equipment to expand operating activities. And then you can read the same question, but you only have to provide the answer for expanding of property, plant and equipment. So don't think not doing it this way in the exam is now somehow benefiting you. They are just asking the same questions in a different format. And if you didn't understand or did not have a comprehensive understanding of the statement and of the different ways of interpreting given information, you will have a problem in the exam. So pay very close attention to that and ask yourself, how can they ask me this in the exam? So please pay attention for your own benefit when you prepare. That you also consider how they can ask these questions. Then point 7, the closed corporation purchased a new building during the year. It was paid. We already did that. We did the equipment. Point 9, last one. Investment consists of 100,000 shares in Ginger Limited. On the 29th of February 2012, Ginger Limited declared a dividend of 12 cents per share payable on 15 March 2012. The fair value of the investment is equal to the cost price thereof. They say dividends. On 29 February, it was declared. In other words, on that date, we became unconditionally entitled to receiving a dividend. And the moment that we become unconditionally entitled to something, it can be recognized as an income. And if the money hasn't been received on that same date, so if not received, we have to accrue for that income not yet received. But in a cash flow situation, did we receive any cash? No, we didn't. So we also have to account for that non-cash flow element. So if I go to, okay, just to summarize, so we know that that now must come out of that first part of the question, and we also know that depreciation was calculated during the year. So let's go back to the answer. So first we have depreciation that we must add back. The depreciation is the 44,000 and the 36. So I'm just going to say 44,000 plus 36. Everybody happy with that? And then we're going to deduct the dividend income. And there they tell us that the dividend income, we have 100,000 shares and a dividend of 12 cents per dividend were declared. So it's 100,000 times 0.1, 0.12 cents. That means it is minus the 12 cents right there. Everybody happy? So let's calculate that. Now we can look for the movements in my working capital. So if I go back to the balances, we already made the notes as I asked earlier, and we said right there inventory and trade debtors. Nothing else showed of any other working capital such as trade creditors. We didn't say anything. We didn't see anything relating to trade debtors. So let's say the movement in inventory and movement in trade debtors. Okay, so we dealt with the profit, 2.2, and 0.3 relates to the inventory. So let's see what they say. So they tell us there that inventory records of the business revealed that during the year, an amount of 250,000 was spent on purchases, and the cost of sales amounted to 217,000. So we want to see what was the increase or decrease in inventory. So let's just go to the opening balances, opening and closing balances, because that's always a very good indication of what the net movement will be. So there we already see that we sit with 45,000. So how do we get to the opening balance? So I'm just going to say the movement in inventory, calculation, so movement in inventory, calculation 2, the closing balance that was given, 45,000, so let's say minus 45. Then we had purchases to the value of 250. Cost of sales, 217. And there we have our opening balance. So the movement, net movement Inventory is the movement between the 45 and the 12. The movement between the 45 and the 12. So it's the 45, 33,000. And it's an outflow. Everybody happy with that? F38.
Yes.
So let's look at the movement in trade debtors. Nothing in the information was given additionally relating to trade debtors. So let's look at only the movement. Trade debtors, we had an opening balance of 35 and now we have 180,000. Is that an outflow or an inflow? So we had an increase of 145,000 in our trade debtors. Is that an inflow or an outflow in cash?
Should be outflow.
Outflow.
Correct. Correct. So since it's an increase, it means we have less cash to use because we have given cash, if we want to call it that, to our clients. They have purchased from us without giving us money. So it's technically an outflow because we now would have had to utilize our own cash to replace or replenish whatever was taken on debt. So movement in trade debtors, I'm going to say there's just the 180 or let's say the 35,000 minus the 180,000, and that gives me a net movement of 145. And then we get our cash generated from operations. Everybody happy with that? Okay, let's move on. Now we need to start bringing into account what we said we want to disclose separately, the separate items. So these are the interest paid or received, dividends, if any, income tax, if there were any movements in our investments, a repayment of loans to members, and then we'll get our net cash flow from operating activity. So we need to go investigate all those things that might have happened. Let me just include more lines there. Let's have a look. So there we have loans to members. The first thing that I see there. So it's a repayment of loans and receivables. So loans to members. So we did have loans to the value of 189,000, and now we have loans to the value of 128,000. So that's an inflow. Since it's reducing, we received more cash. So loans to members. We will say it's 189,000. Again, the importance of knowing the layout of your financial statements are emphasized here, because if you didn't know the layout for a closed corporation, you would not have known that loans to members need to be in this section. So it's 189 minus 128. It's an inflow of 61,000. Let's carry on. So there's the loans to members, mortgage. Let's deal with SARS. So income tax paid. Income tax paid we had an opening balance of 22,500. So let's say 22,500. There's our 22,500, and we had a closing balance of 116,000. Okay, minus 116,000. And let's see what they say the tax was. Point 4. The income tax expense was disclosed as 128,000 in the statement of profit or loss. So that we know is what SARS actually declared. So if we knew the layout of our financial statements and what each line item meant, we would have known that the income tax expense in our statement of profit or loss and other comprehensive income would have been the amount that SARS stated we owe them. So 121,000. So, and if we calculate that, we get a net outflow of 27,500. Everybody happy? Okay. Let's go down. So we've done the income tax. Did we miss anything? There were interest. So we need to calculate the actual interest paid. And deduct that. So here they tell us, they say the interest expense in respect of the mortgage loan for the 2012 financial year amounted to 99,600. So that's just the interest expense. It's not what we actually paid. But the first bullet says the loans from the members bear an interest rate of 10% per annum. The interest for the 2012 financial year was paid in cash to the members. So remember when we did our calculation here, we said we had the loan given. So that's just an expense, not necessarily cash flow. But they say that this part of that interest expense was paid in cash, the loan from members. So only those two amounts. So I'm going to say here, interest expense calculation 1. And it will only be the 7,500 and 11,450. Okay. Minus 7,500 plus 11,450. And then, if I remember correctly, we dealt with inventory and the income tax, the additional amount learned from members we dealt with. The vehicles were separate. We only had the investment item here at the top. If we look at the investment at fair value, we acquired a new investment at fair value. And if we look at just going to go back to the question, so everything is not hanging. Apologies for that, guys. I just lost my keyboard here. Some weird reason. Just going to go back to the question. They say it's also Ginger limited. And as we said last night, if we have a limited, we can assume that it's through profit or loss. I personally do not like that assumption, although it's the safest assumption to make in the absence of any other information. But if you see the limited, you will know that it's a company that is listed and those shares are easily transferable and we can get rid of those shares rather quickly. It doesn't always mean that. So always go with what the question tells you. But if the question is silent with regards to whether it's held through profit or loss or held for trading, etc., then if it's a limited, remember that it's a fair value through profit or loss. If it's a PTY limited, it is fair value through other comprehensive income. So it means that for this one, we will say that it's held for trading. Just apologies for this. Tonight seems to be the evening for technical glitches. There we go. So we purchased an additional shares of 200,000. So investment at fair value through profit and loss minus 200,000. And then we will get to our net cash from operating activities. Everybody happy with that? Okay, last section. So here we said we first will have investment in property, plant and equipment to maintain operating capacity. And leave 2 or 3 lines open. And then we will say investment in PPE to expand operating capacity.
Sorry, sir. You wrote
Yes.
cash flow from operating activities and we're now doing investing.
No, sorry, I just copied and pasted. I didn't
Yeah.
adjust it. Okay, so we have investment in PPE to maintain operating capacity and investment in PPE to expand operating capacity. So if we go back to the information, we said land and buildings was to expand and vehicles was to maintain and equipment was to expand, as per my explanation earlier. So let's say replacement of vehicle and under PPE to expand will be the purchase of land and buildings and the purchase equipment. Land and buildings, 2.5 million. Outflow. Purchase of equipment, 9,000. Placement of vehicle, 180,000. And then we have the proceeds from stolen vehicle. That was at carry amount because the insurance company paid us out what the carry amount of the vehicle was, and the carry amount for that specific vehicle is 44,000. That's a cash inflow. There we have our net cash used in investing activities. Any questions? No questions so far. Okay, guys, I'll also send you the solution to this question. There's nothing else that I think that is important on this question. I've highlighted all the important things that you need to look at. Guys, this session is not going to be too long tonight. I'm going to quickly post the evaluation form as I did last night. If you would be so kind as to just complete the session evaluation form while I put up the second question. The second question will be question 4 that I sent yesterday already. I'm just quickly going to post the session evaluation form. If you are done with the session evaluation form, may I ask that you please use the hand functionality to indicate that you are done. You can also comment done in the chat section. I'm going to give 3 to 4 minutes and then I'll continue. And just as a reminder, please remember to copy your student numbers into the chat section.
Would you mind, sir, to scroll up your screen? I just want to write down the last section.
100%. I'm just busy saving it. So if you just can give me a minute, I'll put it up.
Hi, Tao.
Hi.
Can you please share the notes on the group, the one you promised to share yesterday?
Yes, I will do that.
Thank you.
Thank you, Esther. Guys, if you are done with the evaluation form, please remember to utilize the hand functionality to indicate that you are done, or communicate done, or state done in the chat section. It will be for an indication for me to continue. Is anyone still busy with the evaluation form, or can I continue? Okay, 100%. I'm going to continue. Okay, let's go to the required section first. So here they ask us, with regards to the efficiency consultants, calculate the retained earnings as at 28 February, and then also to prepare the statement of financial position as at 28 February 2011. Let's go through the question. So they say A. Doolittle and B. Daly are the only members of the Efficiency Consultants Closed Corporation. They have an equal interest in the corporation and distribute profits accordingly. On the 28th of February 2011, the financial year end of the closed corporation, the bookkeeper presented the following information to the accounting officer, who is also required to prepare the financial statements of the Efficiency Consultants Closed Corporation. So they give us, remember, as I said last night, they give us the balances as at that date. But it's still very important for you to note that if not stated otherwise, that these are the final amounts as per the 28th of February 2011, unless it's stated, for instance, here by retained earnings, they give you the date, or if the information below says the following still needs to be taken into account. So you need to understand what information it is that you are working with. So here they give us, so they've asked us in the question what they want for when they want it. So they want two specific things. They basically want the statement of financial position, and then they want you to separately disclose the retained earnings as at 28 February 2011. So they basically ask you also to do a calculation. So if we look at a structure to follow, you will definitely find it beneficial to know the financial statements off by heart, because then it will give you an idea in your mind already what the answer should look like and what you must consider as you go through the information. So let's do that again. Let's follow that road, the efficiency group. And please do this question with me, as I've only shared it right now. And there's a reason why I've only I've shared it for those that haven't done it yet. I did share it previously. So if you don't have it, please also indicate it to me so that I can share it on the group. Efficiency group. Statement of financial position as at 28 February 2011. Okay, it will always start with the asset section, and under the asset section we will have the non-current assets. Excuse me, non-current assets, which will always include property, plant and equipment, and you've already seen it there, third from the top. So property, plant and equipment. We don't know if there's anything else, so leave about 3 lines open. Then we have current assets, current assets, you know, will always include inventory, trade and other receivables. Trade receivables. In other receivables, we have cash and cash equivalents. There might be some other items as well, so leave about, say, another 3 lines open. Then you have your total assets. Okay, then the next section will be equity and liabilities. Starting off with equity. Equity, in this case, it's a closed corporation, so we will have members, contributions, and we will have retained earnings. Then we will have liabilities, non-current liabilities. That's just another reminder to please make sure, just to make sure that you've copied in your student number into the chat section. Non-current liabilities, leave about 3 lines open, and current liabilities is the last section. Current liabilities you can say trade and other receivables. And you can leave a few lines open and you can say total equity and liabilities. 100%. And there's your structure. The next part that they want is the retained.
Sorry, Charles.
Yes.
Charles, under your current liabilities, isn't it trade and other payables? Because under your inventory. Okay.
That's the typo. Thanks. The second part of the question is the retained earnings as at 28 February 2011. Okay, we'll get to that. Let's quickly go through the information and see what we've got. Okay, so we've got members' contributions starting with 120 and 95. So let's go to the statement and say members' contributions, and you can already put it in there, 120 and 95. Let's leave it there, just like that. Then we have land and buildings at cost, equipment at cost. Let's see if there's anything else. There's accumulated depreciation equipment. And I think that's the only PPE. So for property, plant, and equipment, let's use a calculation. Let's say Calc 1. Don't know how long this calculation will be, so I'm going to take a few spaces and I'm going to say calculation. Calculation 1. PPE. We have land and buildings. And buildings to the value of 747. We have equipment at cost, 120,000. And accumulated depreciation of 24,000. Everybody happy? So H58, let's go put it there. H58. So there we have our first item. Let's start again. So we've done equipment. Then we have loan from member and loan to member. Remember, loan to member 70,500 and loan from member 93,800. We need to first find out from the additional information whether it's a current liability or not, or a current asset or not. Okay, so but there we have inventory 99,312. So let's go put that next to inventory 99,312. We have debtors control and creditors control 35,600. So here we can again do what we did last night, and let's say calculation 2. Calculation 2, trade and other receivables. We have trade debtors. We have trade debtors to the value of 35,600. Now we must see if is there anything that relating to credit losses. So let's see if there's an allowance. There's an allowance for settlement discount granted. We will use that now. Then retained earnings. There's accumulated depreciation. There's allowance for credit losses. However, we do not know whether the information will give us more insight as to whether there should have been an increase or a decrease. So we'll have a look at that now, but let's go just put it down and say allowance for credit losses 5,000. We'll read the additional information now. Then I saw something here. There's prepaid expenses. The moment that I pay expenses in advance, it is a current asset. So prepaid expenditure 5048. Income received in advance is a trade and other payable, because I've received income that I'm not yet entitled to. Accumulated depreciation we've taken into account. Okay, so we started again. We did debtors control and so on. So let's go to creditors control. I'm not going to finish off this account because I don't know whether there's additional information that I might have to take into account. So creditors control, let's start the next calculation. Calculation 3. Trade and other receivables. As I said last night, when you do your exam preparation, make sure that you know what it is that they are asking in the multiple choice question. If they say they want trade receivables, it is only, there I've written it again. It's only trade receivables. They are only referring to trade debtors. But if they say trade and other receivables, they are including prepaid expenditure as well. So always make sure you fully understand what it is that they are asking and don't let words catch you out. So trade and other payables. So we have trade creditors. Then we have trade creditors of 25,100. There's trade creditors. Then we read income received in advance, the 14,660. Okay, the only other item here, I don't see anything else here that must go there, but let's leave it open, the calculation open, there might be other additional information, but at least you've already noted it and you've already gained marks. Okay, that's the calculation for trade and other payables. Let's go down the calculation again. There's bank. Bank falls under cash and cash equivalents, but there might be other items such as petty cash. So let's go to the question. Cash and cash equivalents. 48,100 plus 2,800. And I'm just going to leave it open in case there are any other adjustments. Okay, then we have the mortgage. And we have investment at cost. Investment at cost. We first need to determine what type of investment it is before we can really say what part must go under what section of my asset sections, whether it's a current or a non-current asset. So we first need to have more information on that. Okay, any questions so far?
No.
Okay, everybody's happy. You guys are very quiet
Hi.
tonight. Yes.
Hi. May I ask a question?
Yes, please.
Okay. On the bank, I can see there's DR, but when the CR, do we take that amount to the trade payables or to the trade receivables?
If it's a CR, it means we have a bank overdraft and it's a creditor. It's a current creditor, current liability, and it will have its own separate line, bank overdraft, under current liabilities.
Okay. If it's CR, it's an overdraft.
Yes, because that means we owe. We owe the bank
Okay.
money.
Okay. Thank you.
100%. Okay. So let's quickly go through some of the information, but the additional information. Point 1, they say a debtor owing the business 3,000 immigrated to Australia without making any arrangements to settle his debt. Efforts to trace him have been unsuccessful, and it was decided to write off his debt as irrecoverable. The allowance for credit losses must be adjusted to 4,700. Okay, let's go back to that calculation of hours. So we have trade and other receivables. We have the trade debtors. And they say they've already allowed for the 5,000 for credit losses. But now they say we have already that data that owed us of 3,000. We're not going to get that money, and we also now have to adjust our allowance for credit losses. So that adjustment we must also take into account. The movement, adjustment for credit in allowance for credit losses. And that movement does it go up or down?
Down.
It goes down.
Okay, so it moves from 5,000 It moves from 5,000. Where am I now?
4,700.
4,700. So minus. So okay, let's do this. Allowance for credit losses must be a negative in any case. Let me just change the sign there. So there will be an increase of 300. Everybody happy with that? So that's the movement from 5,000 minus 4,700. Okay. Because if the
Isn't
allowance,
it a decrease there?
yeah, but remember we are working indirectly here. If the allowance went up, would I have deducted more or less? So should I have deducted 5,000 there or 4,700? So now I'm showing the 5,000 and I'm showing the adjustments separately. So you could have said allowance for credit losses minus 4,700. I'm just showing the adjustments separately. So that 300 and that 5,000 makes the new 4,700 allowance. Everybody happy with that?
Happy.
Yes.
100%. Then one item that's also here that I see now here is the allowance for settlement discount granted. The moment that there's an allowance for settlement discount granted, it will also go under your trade and other receivables. That's also a negative. Everybody happy? Everybody's very quiet tonight. What about the actual credit loss? Any questions? Okay, I'm leaving that account just like that for now, since there might be additional items that we might have to take into account.
So that credit loss, do we work with it in financial statement or in profit and loss account?
In both, because remember it's a movement. So it's a loss. So both these amounts, where am I now? So the 3,000, the 300 and the 5,000 will be credits in my trade receivables account and will be debits in the income statement because an expense gets debited. So those three amounts would also have been expenditure items in my statement of profit and loss. You happy with that?
Yeah, okay.
100%. So let's leave that item just like that for now. So number one, we've dealt with. Number two, the income tax for the financial year ended 28 February 2011 amounted to 126,500 and must still be recorded. So let's go see what we have here. So here we say we have the SARS tax amount is 116,000. So that is what we've paid already. But they say it must be 126,500. So we still owe a small portion of current tax payable. So let's go to the current liabilities and we say current tax payable. Current tax payable will be the amount that we've already paid, the 126,500, less what they, it will be the 126,500 that we should have paid, less the 116,000 shown in the list of balances that we've already paid. Okay, everybody happy? Point number 3. The loan from A. Doolittle was obtained on the 28th of February 2011. Interest is calculated at 8% per annum and must still be taken into account for the current year. So it must still be taken into account for the current year. The loan is unsecured and fully repayable on 1 June 2011. So that's the first important point. There's 2 points there that's very important. The first part is the interest that must still be taken into account. So it's interest that we've incurred, but we haven't taken it, we haven't paid it yet. So it is accrued expenses. And that is a current liability under trade and other payables. And then the date is very important. We are busy with the 28th of February 2011. Any current liability that will be settled within the next 12 months must be shown under current liabilities. That loan is repayable on the 1st of June 2011, which is within the next 12 months after the current financial year. So that part must be paid. So if I look at the loan from Mr. Doolittle, it's the 93,800. So let's go put it there and we say the current portion of loans from members. That is that 93,800. And then we go to trade and other payables, which was calculation. We started with the calculation 3, and I said let's leave it open in case there are or more items. So calculation 3. And we say there accrued interest expense. So let's see, when did we get it? I say here we got that loan on the 28th of February, in other words, the beginning or the end of the previous financial year, but we had it for the full current financial year at 8%. So it is that 93,800, if I have my balance correct there. The 93,800. 93,800 at 8% for the full year. Everybody happy with that?
Yes.
So that is point 3. Point 4. On the 20th of February 2011. On the 20th of February 2011, the members decided that an amount of 44,800 must be equally distributed to them on the 28th of February 2011 as a further profit distribution. It was further agreed that 50% of the profit distribution will not be paid out in cash, but will remain in the closed corporation as loans from members. All loans from members will be repaid in full on 28 February 2013. So that is more than 12 months after the current financial year, which means it must be formed part of long-term borrowings. Everybody happy with that? And since we already have a loan here that I saw, a mortgage, I'm going to create a calculation for that. So let's, under non-current liability, say long-term borrowings. Or I'm going to do it separate in any case. I'm going to say long-term borrowing mortgage, and I'm going to say loans from members. They said 44,800 will be now distributed to them as a profit distribution, but 50% will remain as a loan. So 44,800 times 50% will stay as a loan. Everybody happy with that? Okay. Point 5. In order to consolidate his minor debts, B. Daly requested a loan from the closed corporation. The loan was advanced to him on the 31st of December 2010 at an agreed interest. Remember, look at the date. So it's within the current financial year. At an agreed interest rate of 10% per annum. The interest on this loan is capitalized and the interest for the current financial year must still be accounted for. The loan is unsecured and immediately callable. In other words, it forms part of current assets. Everybody happy with that? Because it will be received back immediately in the next financial year, immediately callable. So yeah, let's say let's look at the loan for 2 members, 70,500. Let's go to current assets because there's interest that we must accrue for. And let's go to trade and other receivables. Accrued interest income. Everybody still happy? So it is 70,500 at 10% for how many months? We advance the team. Yes, 100%. We advance the team 31st of December 2010. So we have it for January and February. Everybody happy with that?
Yes.
Okay, so now what is interesting here is they say in the question that it must be capitalized. Meaning that the more accurate place to put that interest that we've just calculated will be under other financial assets. Because remember, the moment that there's a portion that of a financial asset that is receivable within the next 12 months, we have a section for that called other financial assets. And in this for other financial assets, we will have anything that can be received back within the next financial year. And including in that is this loan of the trade debtor, of the member, as well as the interest. Guys, please just make sure that your mics are muted, eh? Okay, 70,500. I'm just going to leave it there for you guys to see as a calculation, but always consider that it can be disclosed under other financial assets as well. So just so you know. Okay, point number 6. So now we're going to investments. Let's just go to the investment amount. So here we are in investment. So the important part that we need to pay attention to when we're going to read this additional information is whether or not a portion of this investment should be a non-current asset or a current asset. If it is an investment that is held for capital appreciation, in other words, a long-term investment, then it must be under non-current. But if it is held for trading, it must be under current. So let's go read the information. So here they say the investments consist of 50,000 ordinary shares in Sushi Limited. So the limited can already give you an idea for what it might be held. It might be held for trading, but let's read. Purchased on the 1st of March 2009 for R4 each. On 28 February 2011, Sushi Limited declared a dividend of 20 cents per share, payable on 15 March 2011. On 28 February, the fair value of the shares held in Sushi Limited was determined to be R5 per share. So 50,000 times R5 per share. That's now the value, but we need to also understand where that value goes to, but that's the new value of the share. Then the next one says we have 100,000 ordinary shares in Quasi Pty Limited purchased at a cost of 95,000 Rand on the 28 February 2011. So again, the question is quiet with regards to whether it's held for trading or whether it's held for long term. So in that case, it is safe to assume that where it says limited, that we can include that as held for trading and under current assets. And where it's a PTY limited, since shares aren't that easily transferable, you can't just dispose of shares in a PTY limited. It's a bit more complex. We can assume that that is held for long term. So if we multiply the 50,000 with the R5, we get 250,000. Guys, please make sure that your mics are muted. And if you guys have joined the meeting recently, please make sure that you've also copied in your student number in the chat section. So let's go to current assets, other financial assets, plus 250,000. 70,500 plus 250,000. And then we can also go to that portion of the non-current asset section, and we can say financial assets, and that will be that 95,000 in Quasi Pty Limited. And then we've looked at everything. So no further adjustments on inventory, 99,312. Trade and other receivables, we'll do the calculation now. Cash and cash equivalents, there were no other adjustments, so equal 48,100 plus 2,800. Let's quickly look at trade and other receivables. Let's make sure we've taken everything into account. We did look at the members' contributions. We did look at land and buildings and equipment. We did look at the loans from and to members. Inventory we took into account. Debtors control we already looked at. That's that part. Creditors control we did take to its relevant section where we're busy with the calculation. Bank we took into account. Petty cash, mortgage, investment at cost. Allowance for settlement discount granted we already took into account. Retained earnings we're going to look at now. Interim profit distribution to members we're going to look at now. Accumulated depreciation we took into account. Income received in advance we took into account. Just want to make sure we did take that into account. Let's just go to our current calculation of trade and other payables. Yes, there it is. We took into account prepaid expenses. We took into account allowance for credit losses. So there's, unless I'm missing something, I don't think we've left out anything else. So we can calculate that section as well, the trade and other receivables. The 32,623. If you guys get another answer, please I'm doing this question for the first time, so since I'm also human, I can make mistakes as well. So please unmute your mics and you're welcome to differ with me. And there we have our total assets. So let's go look at equity and liabilities. Members' contributions, there were no other changes. We can just take that into account as is. Retained earnings has got its own section. We're going to have a look at that now. The long-term borrowing, they had no additional information on the mortgage. So we can just take the 232 as is. And trade and other payables has got a calculation that we'll finish off now. We've done the current tax. We've done the current portion of loans to members. However, we did not yet do that 50% distribution to members. Remember, the one will be kept as loans and the other one will be repaid next year. So it will be the distribution to members payable, the 50%. That will be 22,400. Let's quickly have a look at calculation 3. We have trade creditors in there, income received in advance, accrued interest. You can just do the sum. So 47,264. We'll calculate the retained earnings now. Okay. Since this is a participatory class, I'm going to give some of these sections for you guys to assist me with, but let's start with the retained earnings. So what are we being given in the information? We are given the profit before tax, and it says there, before taking any applicable additional information into account. Okay. We need to say the profit before adjustments, 498,900. And then there were some adjustments. If we go down to the investments, they say here 50,000 ordinary shares in Sushi Limited, and then there was purchase on the 1st of March 2009. And then on the 28th of February, Sushi Limited declared a dividend of 20 cents per share payable on the 15th of March on 28th February. Okay, so it will only be paid when? On 15 March. Did we take that dividend into account?
No, it's for the next financial year.
But when did we get it?
We do take into account.
Yes, exactly. When did it become unconditionally ours?
28 Feb.
Exactly. It became ours on 28th Feb, so we didn't take that into account. So it is the 50,000 ordinary shares times the 20,000 cents. 20 cents per share. That's the dividends. That is 10,000 Rand, if I'm not mistaken.
Yes, it's 10,000.
Let's quickly take that into account here as well, because we also need to take it into account in the retained earnings. Agreed? Other income. And we also need to take it into account in our calculation for trade and other receivables. Okay, everybody happy? Okay, we've taken it into account in our retained earnings as well. Remember, we are now working with what is given, the profit before tax, and now we need to adjust for the things that might not have been taken into account yet. Staying with investments, there are fair value adjustments. We need to take into account the change where it is held for trading. So it was it was 4 Rand per share. It moved from 4 Rand per share to 5 Rand per share. So there was a 1 Rand gain per share, and we have 50,000 shares. So if we say gain on financial assets at fair value through profit and loss. Everybody happy? And then the one other thing that I can remember that we didn't take into, or that they did not yet take into account, was at our current trade and other receivables, the accrued interest on the loan to the member. We're going to read here, point 5. They say here the interest on the loan is capitalized and the interest for the current financial year must still be accounted for. Okay, everybody happy with that? That 1175. So let's quickly go here and we say interest on loan to member 1175. If you guys have got any questions, please remember you can unmute and ask. So that's other income. Let's now focus on expenses. Let me structure this a bit neater. Okay, so these are the income that we can take into account. Let's take now expenses that have not yet been taken into account. So staying with our calculation on trade and other receivables, remember that guy that left for Australia? So that have not yet been taken into account. But we need to take into account the net effect, which consists of two things. It consists of the 3,000 credit loss plus the adjustment in the allowance. So it's minus 3,000 plus the 300. And that will give us 2,700. I was happy with that. So expenses, credit losses will be the 3,000 minus the adjustment or change in adjustment. not the full adjustment, the change in adjustment. And then also the loan. Yes.
The credit losses. Okay. Why do we have to include it in the trade and other receivable if we're going to do it here on the retained earning?
Remember, the retained earnings are now working with the income side of the income and expense side of things. Remember,
Yes.
for every debit, there's a credit.
Credit, yes.
So if I can explain it in simple terms, it affected the debits, the assets. So for my assets, or for the accounting equation to balance, and the accounting equation is assets equals equity plus liability, it must be taken into account somewhere in equity. And for it to be taken into account in equity, retained earnings must be adjusted.
Okay, on the retained earnings, I understand why we add it. I just don't understand on the trade and other receivables, because I thought we only, when we do the statement of financial position, will include the allowances for credit losses.
But we did.
And the 300, no, the 3,000 of credit losses, why do we include it?
Because it's additional, it wasn't taken into account yet. So that's the actual credit loss that we must take into account. That is the allowance that has been there, and this is the adjustment to the allowance. Happy with that?
No, thanks.
100%. So under retained earnings, we also need to take that into account. And then sticking with the interest portion, there's we included the interest on loan to member, but we also had interest on a loan from a member. So here, if we look at point number 3, we say the loan from A. Doolittle was obtained on 28 February 2010, and they say the interest must still be taken into account. If we go to our calculations, calculation 3, trade and other payables. Do this, otherwise I can't see. Okay. Accrued interest expense, 7504. Okay. Interest expense, loan from member. Okay. And I think those were the only adjustments, and then we will get our profit before tax after we've taken all the adjustments into account now. Okay, everybody happy? Then we take into account the income tax expense that was given. There they say the income tax expense for the year, 126,500. And that is the total comprehensive income for the year. So total comprehensive income. But then we have distribution to members. And the distribution to members, we must see how much that is. So here we have an interim profit distribution to members, the 42,000 plus the full 44,800. Remember, the way that it gets paid affects my balance sheet, the assets or the liabilities. But the fact that it's owed to the members affects retained earnings, the full amount, the 44,800. So it's the 42 plus the 44,800 minus 42 Okay, everybody happy with that? So now that I have that amount, the 336 will be my retained earnings for the year. And then we have our retained earnings beginning of the year. Let's just say retained earnings on the 1st of March 2010. Retained earnings 1st of March 2010 for 472. If we add that together, we get our retained earnings 28 Feb 2020. Ah, look at me. Eager for this year to be over. Okay, so 28 February 2011. Any questions? Okay. Guys, let me just save this for you. If you've got any questions, please let me know. There's a share question that I quickly want to do with you. If I can find it, I had it on the list, and when I copied the information over, I somehow missed it. Guys, you guys are very quiet tonight. Any questions? And then just to confirm, when is your exam date? I just want to make sure that it didn't change from the date that I have.
It's on the 8th.
That's the 8th.
Of December.
Yes.
Okay, so we can still work in a few classes. Guys, just up for discussion. So we have partnerships. I've got the question finally, but just as up for discussion, please note that I'm going to share that voting polls again this evening. I'm going to be specific in terms of partnerships, closed corporations, cash flow statements. I need to know what you guys are struggling with. Then, if you have any questions that you would like us to do in class, you are more than welcome to submit them to me over WhatsApp, send them outside the group. You guys will see that I did lock the group for admin chat only. The only reason why I did that is that a lot of you are writing other modules as well. Now imagine your phone constantly going off. It is a massive disturbance, and a lot of students have actually asked me to limit that. So if you have any questions that you would like us to do in class, please send them to me over WhatsApp, and I can consider doing them in a class setup. So I'm just putting that out there while I'm putting this question up on the screen. So just give me a moment.
Thank you very much, Charles. We're not tired, we're just exhausted.
No
We're not
problem. I can
quiet.
imagine. I can imagine. I understand fully. As long as you guys are finding the class beneficial, then we will continue to add and see how we can keep on assisting. Okay, guys, I'm going to share the question on the WhatsApp group, so have a look out for that. Okay, I'm sharing it as we speak. I will also share the answers after the class with you guys. Just a reminder, if you haven't posted your student number yet, please do so now. And also, if you haven't done the evaluation form, please find it in the chat, the link in the chat section, and complete that for us. We really value your input, and it will only assist us in making this session more beneficial. Okay, the question has been shared. So I'm just quickly going to open my screen. Just let me know if you guys can't see the screen. Can you guys see the screen?
Not yet.
Not yet.
Okay, let me try again. Just let me know if you can see it.
Yes.
Yes, we can.
Hey, 100%, finally. It made it. Okay, so let's quickly read through the question. Let's go to the required section first. It says calculate the number of ordinary shares to be issued. And secondly, record the issue of capitalization shares in the general journal of MTN Limited. So all these questions can still be asked in a multiple choice setup. They can give you the journals and they can ask, select the correct journals that were entered. Okay, so let's quickly do that. Let's read through the question. So on the 1st of May 2007, MTN Limited was incorporated with an authorized share capital of 500,000 ordinary shares and 300,000 9% preference shares. So just a reminder that authorized share capital does not mean it is issued share capital. That is what the company is allowed to as a maximum to issue. The following information was extracted from the financial records of MTN Limited for the financial year ended 30 June 2010. We had share capital, ordinary shares, 305,000, 9% preference shares, 135,000, retained earnings, long-term loan, and bank. Then since its incorporation, MTN Limited has recorded the following transactions with regard to the issuing of shares. On the 15th of May 27, okay, so now I want you guys to read this with me because I'm going to ask you to calculate the first part. I'm going to give you 5 minutes or so and for you to calculate, and then we'll go through it together. So let's read through it together first. On the 15th of May 2007, 10,000 ordinary shares were issued to the incorporators at a consideration of 30,000 Rand. On 30 May 2007, 50,000 ordinary shares and 20,000 9% preference shares were issued to the public at a consideration of 175,000 and 120,000 respectively. On 30 April 2008, 10,000 9% preference shares were issued at a consideration of 55,000. On 30 April 2009, 40,000 ordinary shares were issued at a consideration of 100,000. On the 31st of December 2010, the directors approved a capitalization issue of 2 shares for every 5 ordinary shares held. The board of the company deemed that a fair consideration for the ordinary shares would be 140,000 rand. Please calculate the number of ordinary shares to be issued. Just that part. Guys, same as with the evaluation form. Once you are done, please use the hand functionality of Teams to indicate that you are done. Or you can comment done in the comment section. Does anyone need a few more minutes or can I continue? Okay, let me continue. Okay, so the first is the calculation of the number of ordinary shares to be issued. So first up was the issue on the 15th of May, 2007. Okay. Ordinary shares. We issued 10,000. Then again on the 30th of May 2007, 30 May 2007, also ordinary shares, we issued 50,000. Then again on the 30th of April, we issued ordinary shares. The value of ordinary shares 40,000. And then they say we are going to do a capitalization shares. How did we calculate that 40? The capitalization states you get 2 shares for every. Let me just read that again. I'm going to twist my own tongue.
For every 5.
Yeah, 2 shares for every 5 ordinary shares held. So first you're going to say it's 100,000 divided by 5 times 2. Everybody happy with that?
Yeah, boo.
Yes.
That's another 40,000. So the total number of shares in issue then be 140. Everybody happy?
Yes.
Yes,
And the
sir.
general, and to close off the session with the journal entry.
So,
yes.
When the word capitalization, they also use it when they say to the partners or close cooperation, when they say interest has to be capitalized. Do they mean that the interest which we work with is going to be added to the capital, or it always confused me? Yeah.
Yes. No. Now I'm glad
I
you're
was
raising.
confused here when they say 2% 2 or out of 5 has to be capitalized. If you can clarify that for me, then I'll be okay.
100%. Okay, let me clarify that for you and anyone else that might have a misunderstanding there. So the word capitalization is mostly referred to in accounting, not referring to shares. So let me explain that part first. Whenever you hear the word capitalization, it means you are adding whatever you calculated, for instance, interest, back to the main amount, the underlying amount. So the principal amount. So if you borrowed 20,000 Rand and you say we are not paying the bank back it's the interest, but we are capitalizing the interest, that means every time that we are calculating interest, we are adding it back to the amount that we owe. So we no longer owe the 20,000, we owe the 20,000 plus the interest. And vice versa, if it's a loan that we made to someone, then they owe us the loan plus the interest. That's capitalized. Capitalize under assets. If I have a big aeroplane and I have to put in a new kitchen, I'm not going to scrap the whole aeroplane, am I? I'm going to take out the old kitchen and I'm going to add in a new kitchen, and that's a separate asset to that main asset. And that means I'm capitalizing the cost to that original asset. So there's another way where they can use capitalize. In this specific instance, a capitalization share means it's almost like a free share. We are taking from the company's own reserves, from, say, for instance, retained earnings, and we are taking from retained earnings and we are increasing our share capital. But we can't just increase our share capital. The moment we increase our share capital, it means that more shares must be issued. So it means that now we're going to give away shares. We're going to tell everybody that's registered or everybody that's got shares on this specific date in the company will receive an X number of shares for an X number of shares held. So guys, that's why we're referring to it as a capitalization share. Is it we are taking from our reserves and we are capitalizing that reserves back into share capital, if I can put it in that terms. So, but to do that, I obviously have to issue shares. But in this case, the shareholders are not buying it, I'm giving it to them. So with shares, that is what the capitalization issue means.
Okay, thanks, sir.
100%. So then the question asked, as final, it says, record the issue of the capitalization shares in the General Journal of MTN Limited. They said here, the board of the company deemed that a fair value consideration for the ordinary shares would be 140,000. Where did I say do we get that 140,000? We get that from our own distributable reserves. Remember, think what the word distributable means. It means it's reserves that we can distribute. Okay, so if I do that, I have to take it from another equity account. Equity increases on the credit side and decreases on the debit side. Okay, always remember that thing that I do where I say assets, equity, assets, liabilities, equity, income, expenses. Always say plus, minus, 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 plus, minus, plus, 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 minus. Debit side, credit side. Just align this. Okay. So always remember this part. So now let's do the journal. So what did I say? I say we take distributable equity when we do a capitalization share, and we move it from retained earnings or another distributable reserve to share capital. So I have to reduce one equity account and increase another. So I'm going to reduce retained earnings and I'm going to credit, increase share capital, ordinary shares. And when they ask you this, you must state why did you do it. And this was for the capitalization issue of 2 shares for every 5 shares held. 140,000. And this was done on the 31st of December 2010.
Sorry, sir, can you please repeat why we debiting the retained earnings and credit the share capital?
Okay, so if I'm going to do this. I love drawing. So here we have retained earnings. Okay. And here we have share capital, ordinary shares. Okay. And both of these items are?
The equity.
Equity. Both of them. Okay, so both of them are equity. So this applies. Happy with that? So now we are doing a capitalization issue. So when we do a capitalization issue, it means we want to make share capital more, but we want to make it more without getting money from the outside. We want to use money that's already inside the company. So when there's a capitalization issue, we take from retained earnings and we transfer it to share capital. Can't see what I typed there, so excuse if there's a typo. Okay, can you guys read that? But I'm sharing it over the group in any case. So the moment that there's a capitalization share, it means I need to debit retained earnings and credit share capital. Everybody happy with that? So retained earnings will be debited and share capital will be credited. Does that make sense for everyone?
Yes.
So since retained earnings is we getting from retained earnings, aren't we supposed to credit the retained earnings since the share capital is now receiving from retained earnings?
Okay, but remember, if I take from retained earnings, what's happening with retained earnings? Is it increasing or decreasing?
Yeah, it's decreasing.
So I must go with the minus.
Okay.
And the minus means a debit. So we will debit retained earnings. And share capital is gaining that amount. Since it's also equity, it must be plus, it must increase. So it's a plus, so it must be credited. Everybody happy with that? Yes.
Yes, sir.
This capitalization shares, when do they do it? Is it more like a bonus share, or what happens when they capitalize? Do they give it to the shareholders?
Do you mean why do we capitalize? Why do we do capitalization issue for in shares?
No, I'm saying if the board decides on capitalizing capitalizing the shares, is
Yeah.
it more of the bonus share or what?
Okay,
I
so
don't
yeah,
understand.
it's when you want to it's like you just said, it's almost like a bonus share.
Okay.
You can issue it in terms instead of instance for a dividend. So say for instance we do not want to or the company wants to increase or ensure that its share price increases. Paying out a dividend is important. But say, for instance, the company has got cash flow problems, then it won't be able to give dividends to its shareholders. So instead of doing that, we will say, let's give you shares. We will increase the number of shares that
declaring a dividend.
Yeah, instead of declaring a dividend.
Okay. All right. Thank you.
Okay. So that's basically why we would do that. Any other questions? Okay, guys, I'm going to conclude this session. I will be sharing the answers over the WhatsApp group. I'm just going to share the PowerPoint presentation again. If you're not part of the WhatsApp group, please ensure that you send me your module code, the module code and your name to that cell phone number. Once I receive that WhatsApp, I will then send you the link to join that WhatsApp group. And once I see that you've joined, I'll ensure that you get all the questions and answers that we've dealt with in this week.
Charles?
Yes.
I see this your classes have been recorded. Will you be sharing the recordings as well? How will we be able to get the recordings?
So the recordings, I'm sharing now the chat section on, I'm sharing the screen. So if you go onto the chat section, you will see, I saw last night Adele posted one of the links. Let me just show you. Why can't I find it now? So there's a link. So here's is the link to recordings of the previous sessions. I will also copy that into the chat section. Chat section. I'll also include that on the WhatsApp group.
Thank you.
So whilst we're still on that, is it possible that maybe you share the slides on the charts as well as on the WhatsApp? Because if you share on the charts, it's easier for somebody when he's working on the laptop, then they can easily go to them rather than read them on the WhatsApp on the phone.
I can do that. Unfortunately, I can't do that. I can't post on this group. I can ask if Adele can assist me. But on the phone, just remember, if it's on the phone, you can always email that file to your laptop. So you can share the file with yourself and email it to your laptop.
Okay.
So you guys can do that as well.
You can even Bluetooth it. So that's what I'm doing.
Yeah, it's only that I'm still slow on IT, so I don't know how to do that.
Jean, you can contact me and I will assist you with that.
Okay, sir.
100%. You can just don't give me a call on that number. That number is not a call number. You won't get through. You can just send me a WhatsApp and I'll get back to you on that if you struggle.
All right.
Okay, sir. Can you please have a note that you promised yesterday, the one that you started with yesterday?
Yes, I'm gonna share that also tonight.
Thank you.
100%. Guys, I'm going to quickly share all the notes. So if there's no further questions, you guys must have a wonderful evening, and then I'll see you again tomorrow evening.
Thank you, Charles.
Thank you,
Charles.
Thanks, everyone. Enjoy the evening.
You too.
Bye-bye. Thank you. Bye-bye.
Bye.